Good morning. HDFC Bank's results were largely, I guess, in line with expectations, as in, it's kind of mixed numbers, slightly weak, but that's all right, because it kind of reflects the transition that the bank is going through, because the need to increase their share of loans with the retail, with the SME, which are all higher margin loans. And, the traditional HDFC book has to be kind of balanced out. So this is a process which will take time, and the economy is in transition. So which means loan growth for the bank, for the sector, it will kind of pick up in the coming quarters. So against this backdrop, I think the valuations are all right. Earnings are slightly mixed. So I think we should still give it another quarter.
That's the take coming in on HDFC Bank. Chakri, hi morning. A breakout rally on the IT pack after TCS, Infosys, HCL technology numbers. But do you think that rally is also headed in for a pause now? And I'm just purely going by how the Wipro ADR was overnight.
Good morning. I think, the ADR is a function of, I guess, shortly, what happened in the US yesterday. But I think if you reflect, there has been a pivot in the Indian IT sector. If you rewind back about 12, 14 months, the reason they started falling is because US interest rates were set to rise. Now you have the exact opposite, which is US interest rates are set to fall. Now, so and as that happens, the order books, which are all there, they were all pending. So they'll come back to life, and the companies will start executing. The first companies which will start executing orders is the financial services industry in the US. And that's usually the biggest order book, not only for TCS, but also for the other IT companies, Indian IT companies. So I think IT will now start picking up from here on.
Okay, fair enough. Stay on with us then. And we've got Bajaj Finance as well in the spotlight. UBS has assumed the coverage on the stock with a sell rating, saying that Jio Financial's foray could hurt the consumer loans in the medium term. Let's take it across to Vamakshi, who joins in with the brokerage note. Vamakshi.
Well, yes, Bajaj Finance in focus today on the back of a brokerage note that has come through from UBS. They have assumed coverage in this counter with a sell rating and target price of almost 6,800 rupees per share, which is a significant downside as compared to the current market price. Apart from that, they've highlighted that a high share in consumer finance is what the company has, and the competition specifically in this space is increasing, and therefore it is underappreciated. Jio Financial Services expansion in turn could put pressure on the consumer loans in the medium term as per UBS. In fact, they've also highlighted that the quality of the customer base is actually peaking out, and cross-selling is quite crucial in order to post incremental growth for Bajaj Finance. Apart from that, they've also highlighted that the competitive pressures are actually not fully priced in as far as Bajaj Finance is concerned, and that is the reason why they've assumed coverage in this counter with a sell rating, target price of 6,800 rupees per share, and on the back of that, keep an eye out on this counter.
Okay, that we surely will. Chakri, an interesting note coming in on Eicher Motors this morning. And you've got a downgrade actually coming in. In fact, CLSA is now saying that they've downgraded both Bajaj Auto as well as Eicher Motors. They've slashed their price targets as well. Do you think the run-up that we've seen on a year-to-date basis, and even shorter actually for Eicher, that could be behind us? And are there reasons to believe so?
Actually, I recall discussing this topic with you, at the time of the launch, when Triumph and Harley Davidson had come to India. And so, that marked the kind of beginning where some Eicher would start losing market share, because, there's a good chunk of Eicher buyers, motorbike buyers, who would rather buy a Harley Davidson or a Triumph, given their global brand pool. So that will kind of start reflecting on, and I think that trend has kind of begun, will accelerate. This will kind of impact on Eicher's margins going forward, and both in the sales trajectory as well as in their profit margins. And so now it has to kind of make up for the market share that it lose domestically into market share overseas for its bikes. That's a long drawn out process. Second is, I think Bajaj Auto and all have run their course, but I think they still hold good, because the EV market share, as it increases in the next year, 2, 3, for all the companies, all the two-wheeler companies, will benefit from the transition to EV.
Okay. Naresh, let's look at some breakout stocks. And which, to your mind, from the mid-cap stocks, would you call them as the breakout stocks now?
So, in the list of names which are breaking out, there are quite a few on the mid-cap side. We started seeing a breakout in broking names. So yesterday there was a JM Financial which broke out. So that's one stock which comes onto the radar. Then you have hotel stocks which have continued to break out one by one. So it started off with Indian Hotels. Now we've seen a EIH hit a new all-time high. Lemon Tree has continued to show momentum. Even smaller names like a Kamath Hotels has continued to see momentum. So overall, hotels as a space sees momentum, and paper as a sector tried to give a breakout yesterday. So that's an interesting sector which has done nothing. So a lot of mid cap, small cap subsectors are doing very interesting. So paper, hotels, and apart from that, there could be much more stock specific names.
Fair enough. That's a view coming in on that stock-specific action. Meantime, we just heard it out then from on Bajaj Finance and what the brokerage community has to say. Wanted to get in your take, Chakri, given that Jio Financial's expansion could potentially hurt consumer loans. How are you looking at the competitive pressure and what it could mean in the long haul for Bajaj Finance? Is it a worry?
Indeed, if you look at both what the RBI has done in terms of trying to make the consumer loans more safer, and as a result of it, the casualty of that will be loan growth for Bajaj Finance and for the industry. And second, with Jio coming in now, clearly it's going to impact margins for the industry and Bajaj Finance. Bajaj Finance being the leader is clearly going to be, lose market share in this whole process, and also lose margins, and also its valuation, given its status and being right up there in terms of multiple. That multiple will start coming down as we go out into the future.
Which yesterday fell on strong volumes is Angel One, 14% down. Very strong volumes. Naresh, when you see a sell-off like one we saw in Angel One, how does one look at the stock? Because it's just been a darling of a stock, right? Ever since it's gone public, a 3-digit stock has become a 4-digit stock.
So in such a case, that's the time you want to book profits, because the way you could continue to ride it on was continue to have a trailing stop loss. The stock broke out at 2,000 rupees if you were to take it the highs of 2022. And it went all the way very close to 4,000. It made a top around 3,900. The previous breakout was at 1,600. So the stock has rallied at least 50 to 100% from whichever point you take over the last 6 months. So in this case, post the numbers, the stock has reacted. So we could get into a pause period. You want to take some profits off. And this has been the best performing name in the whole broking space. So a solid return from various price points. Time to book some profits.
Had a look at the entire cement basket. Brokerage is turning pretty bullish, talking about higher utilization levels, and they've upped their target prices across the board. Are you sticking to the heavyweights within cement? What's the view when it comes to mid caps?
For me?
Yes, Chakri, that's for you.
Oh, sorry. Yeah, okay. I think, we will see very strong volume growth, given that the government's push in infrastructure will only accelerate, now up to election and then after the election. And against this backdrop, the input costs have come down. Yes, pricing power that has not been there for the industry, but volumes will kind of make up for the overall thing. So against this backdrop of lower input costs and higher volumes, and valuations are not demanding at all, both large companies like Ultratech as well as more regional players like Dalmia Bharat will clearly benefit.
To get in your take as well as to how you're looking at the entire metals basket, owing to what we had seen a few years ago with that bout of outperformance. Do you think that we could this year maybe see a repeat of that play out?
Indeed, with China now, again opening up, I think, and the valuations for the Indian metal companies are very much, in line. They're very attractive. The balance sheets are strong, given the cyclicality of the business. So against this backdrop, as you see a little bit of more opening up and demand-supply mismatch between Indian metals exports, I think there is a good upside, a positional trade in Indian metal companies. So it would be Hindalco and Tata Steel.
The dollar index is at 101. The China stimulus seems to be kicking in. So it would be a very, very interesting phase. One side you've got strength in dollar, other side China is stimulating its economy. Historically, metal stocks do well when China comes back. Historically, metal stocks outperform because when Chinese they start consuming, they just about consume everything, and that's how the stack on the rack is. 4.1 for bond yield, 13.8 for volatility index CBOE VIX, and 103 for crude. Naresh, it's been like on and off for metals. 2 good days, 1 bad day, 2 bad days, 1 good day. What's your prognosis?
So, like I've been saying for quite some time in metals, the better way has to be playing it through the mining space. So, if you look at it, NMDC, a clean move. You have GMDC, a clean move. You have Coal India, a clean move. You can go into the smaller names as well, whether it is a Jay Balaji or a Godavari, etc. So, the trade out here is in the metals rally, you could have played it better, and you can still play it better with the mining side of it. In terms of the steel and say aluminium names, the volatility has been there and you want to buy on a dip. And even in that, there are stocks like Jindal Steel, JSW Steel, which have relatively not seen a correction and have been a slow and steady uptrend. So out here, my bet is to keep looking at the mining space rather than the core steel and aluminium space.
Okay, fair enough. That's the view coming in. But other stocks that are in under the brokerage radar today include the likes of an L&T Tech. It was results that came out, strong deal pipeline, but the results all in all came in as a bit of a miss. What's your reading, Chakri, into the quarterly performance of L&T Tech?
I think, as you rightly pointed out, the key metric to focus on in this case is the order wins. Yes, they missed a little bit on the top lines. They missed a little bit on the margins, but that was kind of expected at this point in the cycle. Now, the order book translating into future revenues over the next few quarters is what we will be watching for. And I think that trajectory places it well. So I think we would be starting to buy LTTS.
Chakri, just wanted to understand whether there are any stocks that you're recommending a buy on right now at these levels and across market cap categories.
In the banking sector, if you look at some of the NBFCs, the valuations are still on their side, whether it's Cholamandalam Finance or Shriram Finance. All these companies now will start benefiting as the cycle turns towards a more vehicle financing, accelerating as the economy recovers. And also, at some point in the near future, when the rates starts coming down, you will see a loan growth acceleration. So I think companies like Shriram Finance, Cholamandalam are well positioned.
Okay. The stock's hit an all-time high actually, 2,300. One of those rare stocks in the NBFC space. Kunal, NBFCs have done very well. You look at banks, you would say no gains. Private banks, no gains at all. But NBFCs, Aditya Birla Financials, Chola, L&T, even Shriram, 70, 80% moves. They are large moves which have come.
Yeah, but on the other hand, Bajaj Finance has not done anything. That stock has underperformed. So L&T Finance is also the other stock which has done well. So I think as a space, the NBFC stocks have done well. In fact, Chola Finance, Shriram Finance yesterday managed to show very good signs of momentum and breakout. And what we typically like about these stocks is the resilience these stocks portray, even in tough market conditions or in times of a bit of volatility which creeps into the indices. So these are the kind of stocks which tend to move aloof, with respect to the entire overall market construct. They move their own tangent, and if these stocks get into breakouts, those breakouts are more sustainable. So I think that's the good part about these names. AB Capital is something which I've been very bullish on, and my sense is that the stock should continue to outperform. Even L&T Finance from the mid cap end looks also very attractive.
Bunch of other stocks which are going to be in focus. Of course, Adani Energy, wherein the Q3 update shows that their smart meter orders have seen an inch up of nearly about 15% in terms of the units sold on a year-on-year basis. There's, of course, Piramal Pharma as well, which has launched a new concentration of zinc sulfate for injections, USP in the US. So look out for what Piramal Pharma as well does. And then you've got DCB Bank as well, wherein they've got the nod to appoint Praveen Achyutan Kutty as the MD and CEO from April 29, 2024. So that's DCB Bank as well, which is going to be another stock which is going to be in focus. Of course, we flagged off the other names as well. There's Godrej Properties too. Look out for what that stock also does, because they've acquired an additional 1 acre of land parcel in Bangalore. So that's going to be the other stock which is going to be in focus this morning. And, that's the other segment, Chakri, that I wanted to talk about with you. We were having this discussion with not just macro tech developers, but DLF as well just the other day, as to how some of these specific regional players are now diversifying and moving into other geographies. Case in point being a Godrej Properties or a DLF coming to Mumbai.
Indeed, the real estate has always been a very regional play, even though they're very large companies like DLF or Macrotech, but they have largely been a regional presence. Now, you've seen, for instance, Shoba, in fact, expanding outside the country into the UAE and DLF expanding into the other regions. I think that is clearly a good thing because it diversifies the portfolio a bit, lowers the risk overall. But the space has done exceedingly well. The valuations have kind of moved up. Now the whole expectation is as interest rates start coming down, both residential as well as commercial will start picking up. Companies like Phoenix are already seeing the benefits of increased revenue coming from their malls, revenue shares from the malls. So I think this is the overall setup for the real estate industry, where the expanding will only benefit them, but the valuations have kind of moved up, so we have to watch it for that.
Hey, Chakri, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out.